Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any rated item on these my charts. This was all my original work, as I think you deserve to have that. So with that, euro dollar. A second indecisive pattern yesterday, this time an indecisive doji cross, after the previous day's indecisive spinning top pattern. There is still the possibility that the action either side of last weekend might just be a possible tweezer top. The top side was capped once again by the November 2020 low at 116.02 and by the now not so near dark blue neckline, which is currently at 116.41 for the combined June to July head and shoulders top, which also has a double top formed from the head and the second shoulder. These resistances eroded what in any view was a strong bullish move late last week. Prices closed for a second consecutive session right on the 2019 high at 115.70 and the rising green short medium moving average currently 115.73. Further down we have, well, my best description would be limited supports from the February and January 22 highs at 114.95 and 114.82 respectively, as well as what was once an interesting and very shallow bright red neckline extension to the old August to September 2020 head and shoulders top, and that's currently at 114.50, and along with the June 2020 high at 114.22. However, the best support comes from the rising mauve medium moving average below, currently at 113.89. Now, there is an argument that one should look at the main action from last week as a possible bullish morning star pattern of some form. And I can see the argument for that. However, I still think for now the larger combined head and shoulders top and double top pattern is the more dominant pattern here. Hence, for these patterns, for the head and shoulders top, we have a primary target X1 down in the 113.10 zone, with a harder to reach target at X2 down in the 111.41 zone. And for the double top, we had a primary target down in the 114.55 zone, something I pointed out last week, and a secondary harder to reach target X down in the 113.22 zone. As you can see, the primary target for the double top has already been reached. Finally, as I've said now repeatedly for months and months, we are set up with 7 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between would have a lesser outside year pattern. I am at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, not much, either side of yesterday's and the previous day's open and closes. Cable, aka sterling against the US dollar. A second consecutive, slightly higher, indecisive spinning top that was also a second bullish white soldier yesterday. This is a sort of follow-on higher to the earlier immediate countering key reversal up and bullish engulfing pattern seen on Friday. The base of this move up is the combination of the thin congestion band made up from the December 2020 low at 131.33 and the July 23 high at 131.44. And prices now seem to be trying to stabilize over the breached lower trend line, currently at 132.57, of the mid-April to date expanding wedge pattern. That's currently 132.57 way up to 139.5. The lower trend line sits within an interesting congestion zone between 132.46 to 132.65. On the top side, prices punched up through the March 22 high at 132.98, though they closed right on it. However, the main recent pattern here is still intact and was untested at any time yesterday. It is the mid-May to late July head and shoulders top pattern for dark blue neckline currently at 133.54, and we are still below this pattern. Interestingly, we also have in attendance to the neckline just below it and adding to its resistance the slowly rising mauve medium moving average currently at 133.52. So back to the head and shoulders top, we have a primary target X below now in the 131.48 zone, which was reached on Friday, with a secondary harder to reach target X1 further down in the 129.40 zone. I should also note that last month was a monthly key reversal down here. Finally, much like Euro-Dollar, we are set up here for this market to make that rarest of patterns, a possible annual key reversal. Thus we close on Wednesday the 31st of December 2025 either over 127.29 or under 125.11, then we're beyond. Anything in between would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are now set up to achieve one, though it does look we are moving towards an annual key reversal up. So far today, well, not much. Was either side of yesterday's close, and we've just dipped down a little bit at the moment. US dollar against the Japanese yen. A reactionary move higher after the previous session's indecisive spinning top. There was also a second bearish black crow. This was after the earlier very strong immediate countering key reversal down and bearish engulfing pattern on Friday that left behind a 2-day pipe top pattern. Support below the market was with the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69, which was tested but held up. Below this 61.8% Fibonacci line, we have the two moving averages, now flatlining medium moving average currently at 145.64 and a short medium moving average currently 145.76, plus the dark blue middle time currently 144.92 of the important large, shallow and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here, and the other pattern is the broken bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target X for this was up in the 150.5 area and was reached last week, though we still have live a secondary much harder to reach target X1 up at 158.85. Overhead we have Fibonacci levels at 148.11, 148.68, but the next significant resistance comes from the combination of the gold slowly declining long moving average, currently 149.44, and the 50% Fibonacci line, the July 23 to July 24 move at 149.61. So far today, well, really not much either side of yesterday's close, though we're tending towards the top side of the yesterday's range to try and press up through it at the moment. US dollar against the CNH, the offshore Chinese yuan. A reactionary bullish harami yesterday, but which could also be seen as an indecisive spinning top pattern. This was after the previous session's second bearish black crow, and earlier key reversal down and bearish closing black Mariposa combination. The top side was capped, once again, by the congestion between 719.64 to 719.91, consisting, respectively, of the May 2020 high and the 50% Fibonacci line of September 22 to April 25 move, and supported by the flatlining green short medium moving average, currently 17.94, though this was on a closing basis. Further up we have resistance from the dark blue neckline extension, currently at 721.45, of the late August to early November 2024 reverse head and shoulders pattern that is just ahead of the now flatlining mauve medium moving average, currently 721.89, and the flatlining gold long moving average, currently 724.61. In between the two moving averages we have the congestion at 722.88, which tied in with the lows from earlier this year between January to March. Now further down we have the bright red trendline extension, currently at 715.56, for the mid-January to late April 2025 descending triangle, just ahead of the further Fibonacci supports at 714.95 and 714.48. That can be regarded as a one single congestion zone. Finally, a strategic observation once again, and one I'll continue making here until it stops being one. Please note how the gold long moving average, currently at 724.61, has been, despite some up and down waves, relatively flat lining for quite a while. So that if prices do stray away too far away from it, then they seem to be brought back in towards it, and that applies in either direction. So far today, a small follow-on higher, but once again capped by the congestion area overhead between 719.64 to 719.91. US dollar against the Brazilian real. An interesting inverted hammer pattern yesterday. Now, those who know will recognize that inverted hammer patterns are the subject of much debate in the technical analysis community as to whether their traditional role of a bullish reversal pattern is to be justified. This one was formed after the previous session's bearish open and close black Mariposa. There was also a second bearish black crow. The market continues to be capped by the green short medium moving average above, currently at 554.81, with prices steady at the low of the previous session in the 549.57 zone. Nearby on top, we have the declining green short medium moving average, currently 554.81, which does on occasion act as an overhead resistance, especially on a closing basis. And looking further above, we have the declining mauve medium moving average, currently at 563.19, and nearer the bright red upper time, currently at 557.89, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Now, this pitchfork has been the showrunner here since spring. Interestingly, the mauve medium moving average is also close to the otherwise interesting and significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Meanwhile, further below, we have the purple May 24 today uptrend, currently at 542.89, which is now just exiting above a congestion zone below, made up from the 50% Fibonacci line of the April 22 to December 24 move at 544.57, and that's down all the way from 544.57 down to 540.16. This congestion also contains the dark blue neckline extension to the June to September 2024 head and shoulders continuation pattern, and that's currently at 542.55. US dollar against the Mexican peso. A reactionary bearish black Mariposa yesterday after the previous session's third and higher large indecisive spinning top. The move nevertheless did not directly affect the stabilization we have seen in recent days over the bright red upper time, currently at 1860.92, of one of the two recent showrunners here, the robust bright red early May to late June bearish Andrews pitchfork. Plus, we are even higher away from the other major pattern here, the many months old and breached many times early May to late July dark blue bear channel, currently 1833.31 to 1858.16. Now, the top side was capped again by the slowly declining green short medium moving average, currently at 1888.90. However, it justified what I said last week, and I quote, "This is enough of a breach higher that I should start considering topside targets," and these start with the green declining short medium moving average, followed some distance higher by the congestion band made up from the March 2020 low at 1915.03 and the 50% Fibonacci of the November 20 to April 24 move at 1920.38. We're also now set up for a weekly key reversal here. End of quote. Well, yes, we didn't end up with a weekly key reversal up last week, and this offsets the quite extensive follow-on lower from the original move down below the overhead very wide congestion band that eventually became a rectangle top pattern is centered on the September 22 high at 2057.65. However, such a move lower is a bit disappointing after last week's key reversal up, though we are still well within last week's range. Now, so far today, not much, a little lower, edging just that little bit lower, but not extensively.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.